If you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord. What's going on, everyone? My name's Obi and welcome back to Courtside Financial, the channel where we talk about business and technology. In today's episode, we're going to be talking about a topic that we've all been highly anticipating, NIO's Q1 earnings report. So this is going to be a super interesting, super insightful video, going to share a little bit of my thoughts and keep it mostly objective. Make sure you hit the like button, make sure you hit the subscribe button. We're trying to get to 10K before the year is over. Click that notification bell icon to get notified whenever I post, and leave a comment down below. All your engagement really does go a long way in helping out the channel. And without further ado, let's get into today's episode. So NIO has finally released their Q1's earnings report and had their Q1's earnings call. While the results might not be so stellar due to the Chinese holidays, don't focus too much on the pre-market price. The company's revenue slipped in Q1 as deliveries declined. NIO reported a 7.2% year-over-year decline for the first quarter, missing analyst expectations by 10.75 billion RMB. But this decline is not surprising given the weakness in the Chinese market due to the holidays, and then there's also added pressure from the dreaded industry price war. Despite the weak Q1 results, which we anticipated Q1 wasn't going to be the greatest quarter, there's still room for optimism with NIO, in my opinion. NIO provided guidance for their Q2 deliveries between 54,000 and 56,000 units. This suggests that June is going to have deliveries between 17,800 and 19,800 units. So this is a positive signal for NIO investors, and it definitely marks an inflection point for NIO's trajectory. NIO achieved its best monthly results ever in May, delivering 20,544 vehicles, following the delivery of 15,620 vehicles in April, bringing the total units to 36,154 for the first 2 months of the quarter. During the conference call that followed the earnings report, William Li revealed plans for NIO's exciting expansion into the UAE market. He said, regarding our entry into the Middle East, we're planning to offer our products and services in the UAE later this year. This move's definitely part of NIO's broader strategy to expand its global footprint. In December, NIO secured a $2.2 billion investment from CYVN Holdings, which is an Abu Dhabi-based investment vehicle. The deal, as we talked about several times on this channel, increased their stake in NIO to around 20.1%, and that follows a $1.1 billion investment made last year in July. When asked about the European Union anti-subsidy investigation towards Chinese-made electric vehicles, he expressed his disapproval of increasing tariffs in the energy sector, similar to what Elon Musk has said not too long ago. He says, of course, we think that this is a very wrong direction because of the sustainable development of the world. He thinks that the tariffs are working against the sustainable development of the world, which I have to agree with. It's like, you want a greener world, you want a more sustainable world. However, you're making it harder for the people and the players that are trying to do that and trying to bring these great products and solutions to consumers. Despite this, Lee assured everyone that the company is ready to be adaptable and able to adjust its strategy in different markets where they have to play around things like tariffs. Currently, NIO sales volume in Europe is pretty low compared to their overall sales volume, so it won't necessarily have any impact on short-term operations. But William Li says that whether it's Envo or Firefly, the company will make the most reasonable tariff adjustment based on the geopolitical situation. In terms of future growth, here are some snippets from the earnings call. Margins are expected to reach double digits in Q2, really good, and they're going to continue to improve in Q3 and Q4. I hope NIO can hold up on this promise. If they do, that'll be good. No one expected this to be the most stellar earnings with Q1, so we're definitely looking ahead. We're definitely looking for the light at the end of the tunnel, more or less. With Envo, they're going to have 100 stores spending 1 to 2 million RMB per store. NIO says that this won't be a burden. Something interesting there is that they say they'll be using more in-house chips, likely to replace vendor ones. I talked about this on one of my podcast episodes where we were talking about, I don't know if it was the first one or the second one I did, but like I said, do you think NIO will become less reliant on suppliers like Nvidia, kind of how they did with Mobileye when they found out that they had a better technology. This is kind of what I was alluding to. Looks like it's happening. All these car companies want to start developing their own chips. It's not their core competency. I don't know how that's going to play out, but if they can successfully do it, they can bring down cost, which will be a good thing. They say Envo pre-orders have exceeded their expectations. They don't like to give out those numbers because, as you know, pre-orders can be canceled. That's what they said on the earnings call. Apart from that, NIO is seeking counsel and cost reduction advice from their partner. Their expertise and industry experience is going to be crucial in helping NIO get to new heights. With these efforts, they're likely to see significant cost reduction and revenue increase in Q2. On the personnel side of things, NIO's been pretty active. We see that they've been hiring on a hiring spree for Envo, and then when it comes to Europe, they've appointed a new head of European business, and that's part of their restructuring effort in their European organization. And this move aims to prepare for the next phase of expansion when it comes to their sub-brands. In China, NIO registered 6,700 insurance registrations just last week, setting forth a new record for the company. From May 27th to June 2nd, NIO increased its registrations by 24% from the 5,400 units registered in the previous week. This definitely shows strong demand and bodes well for future sales growth. So in my opinion, be patient, longs. The Q2 outlook is positive. The Q1 outlook wasn't anything that was going to change the world for us. We knew that going in. We knew that there could potentially be some surprises, but nothing too crazy this time around, in my opinion. But with the company's horizontal expansion efforts and future cost reduction strategies, NIO is definitely poised for future growth, in my humble opinion. Anyways, that's it for this earnings. Thanks so much for being here. We'll catch you in the next installment of the Courtside Financial Podcast. Hope you guys all have a good day early in the morning. Who knows when I'll be able to get edit this and get this out. I have to do some things for work. I actually have to log on and go take care of some things in a couple minutes here. So bear with me as I try to get this out for you.